In this next module, we're going to talk about how we communicate the accounting information that we've recorded. How do we communicate the results of that to the users? Well, the way in which we do that is we prepare basically 4 financial statements. And we'll cover each of these financial statements in detail in this lecture. First, there's the balance sheet. Then there's the income statement, retained earnings statement, and the statement of cash flows. But actually, we begin with the income statement. We must determine for ourselves what was the income that was earned by the company. Now, the income statement reports revenues and expenses. That's all. And the difference between the revenue and expense is either net income or a net loss. But notice here, we have the Sierra Corporation income statement. This is a time period statement. It's for a specific period of time. And it will always tell you what that time is. It's for a month, ended October 31st. What that means is this revenue is revenue that was earned between October 1st and October 31st. It does not reflect revenue earned before October 1st or revenue after October 31st. It's only during October 1st to October 31st. And therefore, all these expenses are the same. These are expenses that were incurred between October 1st and October 31st. They're listed here in high to low. You do not need to do that. But the total is $7,740. Now, the financial statement is organized that way. What you do is you can see you have 2 categories, revenue and expenses. And they are the outside column, revenue and expenses. If I'm going to add, I don't add them all here and then subtract or what have you to get 7,750. I move inside and I total them in this column and I draw a line and I carry the total out here, total expenses. Then when I draw this line, I am subtracting the expenses from the revenue and I get what's called net income. Now the convention is that we double underline. Double underline means we're finished. That's what the bottom line is. The income statement 2,860. Now recall this is a corporation. It says Sierra Corporation, so it's owned by shareholders. So that money belongs to the shareholders. So the next statement is Sierra Corporation retained earnings statement for the month ended October 31st. So this is another word for profit is earnings. Retained earnings reflects the profit that the company Sierra is keeping. So this statement tells you what the profit is. They earned $2,860. They did not have any profit before October 1st, so obviously they started in October. We add the net income, but here we must subtract the dividends, the amount paid to the shareholders, $500. So what is retained, kept by the company, is $2,360. Again, double underline. So that is the profit that is kept by the shareholders in the company. This is the profit that was returned to the shareholders in the form of cash. So this statement shows the changes in retained earnings from that period and is evaluated. Now lastly is the balance sheet. Now notice one thing. The balance sheet is not a time period. It doesn't say for the month or anything. It just said at October 31st. This is the balance sheet. So the balance sheet is at a particular point in time. At the end of business, the assets of the business are these: cash, accounts receivable, supplies, prepaid insurance, equipment, net. Now, I would have preferred to see this summarized here and carried out here. We double underline that because of the total assets. Now the liabilities, what the company owes. This time they did it right. They recorded it on the inside column, draw a line and bring it out here. And the shareholders' equity. Now, the shareholders' equity comprises of two things. The shares that they purchase, which is called common stock. That's money that came into the company. Plus the money that's kept, the retained earnings, 360. So what the assets that the company owns is 21,910. Creditors can claim 9,550 of those assets. The rest belongs to the shareholder. So the balance here of the liabilities plus shareholders' equity is exactly the same as the assets. Remember our balance sheet equation. Assets equal liabilities plus shareholders' equity. So therefore, think of the balance sheet as one point in time. It's a snapshot of the business as at the end of October 31st. The income statement and retained earnings is a moving picture. The income statement had zero revenue, zero expenses on October 1st, and then the revenue increases and the expenses increase, and the total at the end of October shows you the total amount of activity that took place between October 1st and October 31st. So think of the income statement as a motion picture and the balance sheet as a snapshot. Lastly, we look at the cash on the balance sheet. We say, okay, look. We know that there are three types of business activities. 1, financing. 2, investing. And 3, operating. Well, the statement of cash flows examines each one of them. We start with operating, though. Cash flows from operating. How much money did we get from operating? Well, that's our revenue and cash payments. So we get net cash provided. Cash flows from investing. Well, we purchased some equipment. And there's cash flows from financing. We issued common stock and we paid a dividend. So you see our cash at the beginning of the period was 0, but the change in cash is $15,200, which is exactly our cash balance on the balance sheet. Now, at the beginning of this course, you're just responsible for the income statement and balance sheet. Later on, we will talk about the statement of cash flow.